Okay, good afternoon all. I'm going to run through our midday. Can everybody hear me? Can anybody hear me? Well, thanks guys. Okay, let's get at it. So FSLR holding up. Looking at that as an entry for myself. OMVS still on my watch intensely, of course. CYTR. It came off. We're looking for a $1 break for a possible 149 target. That's the penny possible mover here. DVAX came off a little bit. It's the big mover this morning. On a daily, let's take a look at that one really quick. So on the daily, we've been watching this one. So it gapped right up to its resistance. Got its 200. Came back and tested that 50 right there. Got going again. I should have hit that. That was really silly for me not to hit that after it tested back on the MA on Friday. Silly. XXII on the daily. It's kind of funky with the 200. It's got Momo again. Pardon me. Its problem is that it's got these natural resistance points above, and so it'll have to fight through those. And then our Momo stocks here. So DVAX, we looked at CDI. Can't remember if we did charted CDI recently. I don't think so. Interesting. Not something I'll look at. NOVN. Huh. Kind of interesting. Not really though. RDFN. So this is obviously a IPO. That's what I'm looking at. Real estate development, operation services. Straight price action breakout, IPO. I really got to start watching IPOs again. They've been pretty strong lately. Shoot. Yeah, I'll have to get them on the list from now on. Wow. Wowza. Hasn't backed off at all. Wow. SBBP. Sorry, we'll have to go over the daily here. Busy office. My phones always get going right at midday. You guys. Natural gas. We can take a look at the natural gas chart for sure. So this is coming up out of its bowl. Very interesting chart. Geez, I don't know what to say here. I think I better save this one. We'll see how it acts pre-market tomorrow morning, end of day today and stuff. That's interesting. So I'll come back to that one. That MACD is about to turn up too. This might be one for tomorrow or later today. Wow. Very good. MYO, we've looked at that lots. Take a quick peek here. I'm going to trade these with our fund. Start trading that tomorrow morning. Our private fund, that is, not SB or not MYO. I'm just looking at the chart here. Not an easy stock to trade, that's for sure. Some interesting charts here. An IPO, I guess I should be watching that too. Put that on watch. So this doesn't really respect its 200 well, but it does to a point, and it's got the 200, and it's coming up out of its bowl too. It's testing the bowl. Breakout. Very interesting. So this is a US IPO scenario. Chinese search engine. So Somebody was telling me about this one last week. And I didn't listen. Should have checked the chart out at very minimum. I have to keep a watch on this one. Okay. AHGP. KBSF. So they're saying that these fashion / some retail might get going. AWI. Wow, SERV is going again. I discounted this chart last week. Shoot. Well, you can't ignore that chart now. Dang it. Okay. Wow, there's some charts here to watch, boy. Yeah, because I looked at it in here. Yeah. Wow, it's a strong candle too. See how the candle looks here at the end of the day. AHGP, SBBP, KBSF, AWI, SERV, MBRX again. Dang it. We were watching that one too. Squeeze momentum just turned green today. MACD's up, stock RSI's up. Not the best volume. But we were looking at this, I think, well, a couple times. Yeah. Okay, give me 2 minutes. I'll be right back. I'm going to turn off screen share here for 2 minutes. Okay, sorry guys. Sartaj is out today, and busy office. MBRX. I don't know what to say. I mean, every time I look at it, it says it's a buy. Its problem has been, wow, the volume's not bad. Jeez. You just gotta hate when you leave it too long. I guess you can't get them all. Wow. Wow, wowza. Well, I'm gonna just save this, and then it'll be on my watch list, and I'll deal with it properly here. Darn it. I hate when you miss a good setup like that, though. That's such a, I don't know what it was that caused me, something caused me not to go, because we were all over it. Dang it. There's really no excuse. Too many choices maybe at the time. Shoot. I don't know what to say. I don't know how I missed it. So SOHU. Just gonna go back to this one here quick. Oh, there's some good charts here today. Aggressive stuff. So this reports. That's the mojo. STS up 6.14%, trading 1539. I don't think I've charted this one before. Not my style. ACET. Right up against its 200. CLH. Hmm. Interesting. So if it gets up over its 50, I would look at hitting it. RLJAE. Hmm. It's over its 200. It does have somewhat of a gap fill. It is coming out of its bowl. But I don't know what to say. It's just not my kind of stock, the way it trades. But technically it's sound. Sorry about the yawns, guys. DTEA. Well, a lot of these I haven't traded. There's definitely a rotation happening here. And earnings, I guess, could affect it. David's T. Yeah. So it's that rotation on the go here. SB. Just not my bag. 3 left here. APEN. Some interesting charts there. Definitely worth the study on those ones. No good. CRDS. And DGII. Okay, let's take a look at natural gas here. just gonna go look at this SBBP real quick, and then I'll grab natural gas again here.
I just want to see how this 5-minute candle terminates here in 30 seconds on SBBP. Oh, pardon me. Sorry, guys. Half the time I don't realize my mic's on. Sure like this midday action. But it's 180,000 shares, but wow, great action. Natural gas. Oh, I have my mic on again. Forgot all about it. Oh, there's the problem right there. Moment. This is pretty spot on. I mean, it might be a little off, but not far. So based on that, you're at a neat place with natural gas because it so it failed. It failed. Sorry guys, I'm just trying to get a visual here. So it got up to its apex here, its apex there. Tried to break into its upper. Broke back down.
might break down another right now. Breaks down another. Then what you're going to see, come on, info. You're going to see it's a big test for it right here. Huge. Huge test. Because if it breaks down here, then it's in here. If it's in here, this is its apex, and this is its lower apex, or inverse. So if it fails these 276 and 274, the machines will chase this lower inverse apex. But, well, be careful with that comment, because natural gas isn't right in the head. It takes some kind of have to run the whole model through. But you could take this model and work it backwards. We could always model this in our class on Wednesday. But look at it's failing right now. It dropped pretty hard out of that quad there. So would I trade it? I wouldn't trade it until it gets down in here. Because in between where it is now and 274, that's like no man's land. There's no way to tell what it's going to do. But I certainly wouldn't go long. If anything, I'd be short biased to 276. Is that 276? Yeah, 276. It's a long ways down. Well, long ways on the intraday. It's 280 right now. I wouldn't be long until it got out of this quad that's in right here. These diagonal orange lines. If it bounces out of these diagonal orange lines, either this one or this one, then I'd go long. And I'd say there's a a significant opportunity somewhere around this apex. It'll bounce out. So somewhere around August 8th. Because it bounced out, well, it tried to up here, right? Out of its apex. It didn't get there. Bounced out later, which is odd. But miners do this too. Same kind of thing. There's its apex there, right? So we should model this on Wednesday. Because UGAS and DGAS, man, there's some great leverage there. And trading that fund, I need as much width and leverage as I can get. It's just not an easy one. But if you're ready with your levels, you know where your risk reward is, and you size it right, why not? Yeah. It's in trouble. For sure. Natural gas is so funky to model. Yeah, look at fall out of there, hey? She's in trouble. $274 is your real test, like intraday. 277 IFE, 286 IFE. This one, 274. That's your big one. But your big ones are those diagonals. You can see how it responds to the diagonals, eh? The quads. Anyway, these you should pretty much ignore. I mean, you can use them, but don't really want to trade off them. Not very predictable. I'll just put them down on this side so we don't get distracted by them. Yeah, 276 and 274 are your big ones. I guess 276, 274, and yeah, 274 is your big one. Yeah, if I had to guess, right, and I hate guessing, but especially with a bipolar trading vehicle, but that's my guess right there. Yeah. Makes sense. Pardon me. If I had to guess, this is your trading range right here, this triangle. And if it doesn't hold that 274, it could go anywhere. But the way that these work is, now, natural gas is funky, but wherever it came out last time, let's see, this time here, it came out the same place, it just came out at a different wall. So in other words, like, yeah, I gotta model this back. But my suspicion is it's dropping out, it's popping out and dropping out here every time. Either popping out there or dropping out there. So, you know, if it's dropping out there, that means here on the low side. If it pops out, you find these work this way.
pops out, it'll pop out here, which makes sense because if you take this and you clone it, yeah, there it is. Now, its trading range was to the mid, which is very tradable. So the mid area of these quads, always pay attention to them. They're always support. So, but the point is it popped out here at the corner of this triangle. Right here, right? So your trading range actually might be down to mid and have a pop out here. Just Sesame Street. But you'd have to model it backwards to see if it's actually, repeating itself. Popping to the upside here and popping to the downside here. But it ain't popping at the apexes, which is kind of odd. But that's what miners does. Miners gets really predictable that way. So, really, you have to be careful with your trading range here because, like, if you're actually trading it, you want to consider that mid. That mid is an important place of trade, important support, and it might even lose it a bit too, like it did there. So it's really a matter of how it acts right here at that 274, in my opinion. And if it doesn't act well there, then you're looking for the midpoint, and then you're looking for an exit here. Right at the end of the time cycle. If it fails down over here, see over here it failed the mid. This is its mid right here. You see what happened when it failed the mid. Now it did fail at once here and it recovered. If you can imagine a quad here. It did fail the mid once. And it failed it again and boom, it came to the downside, right? But it just dropped like a rock. See how predictable that is. But this is the way these things work. And then it's just Fibonacci on steroids. That's all this is, right? So that's your exit if it's here. So when it did it before, yeah, sure enough, yeah, that's where it is. It's right here, which makes sense. Sort of. It's not as predictable as it could be, but and then you don't even know for sure unless you go back on the model. Like I was working with a tech on the weekend with the with the cryptos, and showed them how you have to go back. You have to go back in history because if you don't, you'll look like an idiot. They'll make you look stupid. This this discipline will make you look really stupid if you start telling people this is the way it's going to be if you haven't backtested it or at least looked at history, right? Once you look at history and you get the whole history on it, then you know your approximate probabilities, right? As soon as you look at history on this, you back model that, you can put a percentage on this. You can say, well, 9 out of 10 times it does this, 1 out of 10 times, or whatever, right? Then you get your probabilities on your trade. It's simple. It's simple Sesame Street, right? And probabilities. Then you get a risk reward. I know 6 times out of 10 it leaves here. And then you can set your probabilities on your risk reward, because that's what trading is, right? Risk reward. And then, you know, on a tighter time frame, so you get a tighter time frame and get risk reward in a tighter time frame. Then in that wider time frame, in that quadrant, you know your risk reward, and you know if it acts in a certain way, then your risk reward goes way up, because it's doing what it's supposed to do. So all the way along, as you trade through the quadrant, your risk reward probability accuracy goes way up. I might trade seasonally, but it doesn't matter if it trades seasonally or daily or, you know, every decade. It's still a quadrant. They're all quadrants. It's a time frame, right? It's separate and apart. It doesn't. That's why when people, you know, talk about the news and they talk about this and they talk about that and they talk about all these different things, like our oil traders. A lot of our oil traders, when they start in our oil and Epic's model, one of the biggest things that screws them up is they're like, well, what about, you know, the new contracts? We couldn't care less. It doesn't affect anything, because it's all trade inside of a time frame. But you don't know until you have to do your work. You take this and you build it backwards. MACD, stock RSI, squeeze. They probably do. Like if you're gonna, like once you're ready to trade it. But I wouldn't trade it until you have this done. You build this out first, then you know, okay, you know, do I have my probabilities right? See, I can't trade natural gas, oil, gold, metals, you know, resources, etc., without the models, because the models provide me with risk reward. And as soon as you get that, as soon as you realize, as soon as your mind gets around that, because your job is risk reward. So you need your model first. Then you take your model and you work backwards. Like, I mean, you got to model backwards, but I mean, work backwards from your model to all your indicators. And then you get down on tight time frames. And that's why, you know, with oil, my win rate's 97%, 96, 97. So that's how you do it. But until you build this out, I mean, this is just, you know, a few time frames, right? So you just clone it all the way back. And then once you got it cloned, and you look at each quad, you have to look at each quad, and you look at where the price enters the quad and where it leaves the quad. And then you say to yourself, you know, so it's literally it's Sesame Street. You know, does it enter and does it exit the quad at the same place? How many times did it enter here? How many times did it exit there? On all these quads. Okay, look at that. Oh, interesting. There's a pattern, right? And then you go to your quad and you go, okay, it's either going to exit here or it's going to exit there. Okay. When it exits here, what does it do before it exits there? What do I look for? Okay, so it's doing blah, 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 blah. I know there's a 95% chance now, based on what it's doing, that it's going to exit here. And that's algorithmic model. And a lot of traders don't understand how simple it is. Like the Sesame Street part. And then down here, same thing, right? If it does this, this, and this, and this, I know 95% of the chance it's going to leave here. That's why a lot of times people are like, I don't understand how you know that stuff. And like a lot of people, like, you know, do like, you know, like in private conversations, people are like, I thought you were a witch, right? Or, you know, it's just this. And then you can actually get to the point, if it's predictable, you can say, okay, on this date at this time, it's going to be here. Right? That's how it works. There's no magic. And then once you have your model down, once you know your model and you know where it's going to exit, then it's a matter of just trading it until it exits. So, and then as it exits, you know probability where it's going to go in the next. And that's why I hardly lose oil trades, because I know from quad to quad, this is its probabilities in its next quad, and its next quad, and its next quad. And that's how modeling works, and that's why they can code it, right? So that's why the algorithms work so well, the new ones. Yeah, the magic's the work. Oh, yeah, like setting up the initial. I think the magic's actually get written down and doing the work, because it takes time, right? It's very tedious. But yeah, getting the initial model set up is not easy. Yeah, but that, I mean, you just practice. But this is where you're at with this one. Now, I can't even tell you, because I know we've tried to model natural gas sometimes. I can't even tell you if it's predictable. I can't remember. We stopped trying about 6 months ago. So its predictability might have changed too. So I'm going to save this one, and I'll put the link in the room, and then Wednesday I'll model it. Why not? Won't take that long. No, until we got the basics right. And we'll know. Hey, I'd love to do it today. I just I have classes I have to be in Monday afternoons. Chart pattern. Yeah, no problem, Sean. I wish I could give you more of an answer right now. But Wednesday, I'll tell you everything you need to know. Is it being recorded? Let's take a look. Yeah. You guys want me to send you a copy? Copy, and then what you do is yeah, no problem. I'll send you guys a copy tonight. I'll make a note right now. Once you learn how to do this, like you'll see, like with my, oh, there it is. Just got delayed there. So this is at 1 p.m. So send. Is this part of the midday? Did I stop it? Anyway, 1:27 p.m. recording. I think this is the midday still recording. So what you're gonna find, I'll tell you the secret right now. And as soon as people realize this, then everything goes better for them. Like I have some students that just don't lose anymore. But the thing is, you can't do this. Like you can't do what I just did and leave it and think that you have it, right? So I have students make that mistake. Every single one of my students have made the same mistake. Every single one. 10 out of 10 make this mistake. They get good at this part, and then they assume they got it, and then it catches them. And I tell them every time, you got to go back. Like you got to go back. I'm telling you, if you don't go back, like at least 12, 24 months, really, you got to go back. You should go back 60 months, and it's a lot of work. But at least go back 12 to 24 months. But once you got it, then now you know the way that these function. And I know I already said how it works, but then you know what your probabilities are. And some of them you'll see, it's crazy what your probabilities are. You'll be like 9 out of 10 times it leaves here, 1 out of 10 times it leaves there, and 0 out of 10 times it leaves anywhere else. Like that actually happens in these. And then it's like, if it does this, this, and this, and this, I know it's leaving there. If it does this, this, and this, and this, I know it's leaving there. And that's why I can look at the markets and I can tell you if the markets are off, because the models get divergent. All of a sudden, all the models are divergent. And so there's an anomaly in the models. So when you go back, that's another thing about these, is you have to remove the anomalies. So that's why you want to go as many months back as possible, because if you have 100 of these quads to look at and 3 don't look like the other 97, and you look at those 3 and you look at the dates and you look at what was happening geopolitically in those 3 quads, you'll see things like, oh, that was the day we invaded Iraq, or that was the day that the planes hit that was 9/11 or whatever. And you'll go, okay, I can remove those quads from my probabilities. Because you as a trader, it's all about your probabilities. And this just brings up your probabilities. This puts you in the 1%. And then once you got this, and in order, then your probabilities of the quad, and then you bring it down in your time cycle. Instead of 1 hour, now you're trading on 5 minute, right? On your day trades. And that's why you'll see me get really serious about this with our fund in different ways. And I'd love to trade natural gas, because like just in simple ETFs or ETNs, like forget futures, like futures, yeah, 10 to 1, but even on your ETNs or ETFs, I can get 3 to 1, right? So, but you got to know your model. So good luck with that one. I'll model it on Wednesday and see how we do. But these are close. Like this is close. I'm surprised this isn't right at the apex. Like that had me a little bit iffy. And then how these popped up out of those quad walls there. But this touch is perfect. This is nice. This is all really nice. That touch there is just absolutely perfect. And then how violent it gets here when it comes, when it fails a quad wall. See, when it fails and when it gets up over a quad wall, fails a quad wall, how violent it gets, that's where the money's made. See, when it's getting to the quad wall and where it's going to exit or enter, probability wise, that's where your money's made. And I can guarantee you, if we move this down on time frames, because inside here, are quads inside of the quads, right? And so, wherever you see this violent activity, that's price leaving and entering time quadrants, time cycles, time frames. And the reason why it's getting so much more predictable, my opinion, it's just an opinion, is that it's, the liquidity, well, how many people, we got a small room here today. Well, I can say it this way. There's nothing wrong with saying this. Some of the that's right, yeah. It's the liquidity, so it's the machines trading huge volume because they know that when it leaves the upside of this quadrant, it's going to get volatile, or when it's going to leave the downside, it's going to get volatile, or upside volatile, downside volatile in between, at each one of these, when it departs the quads or comes into the quads. This is pretty interesting that it hasn't got volatile to the bottom like it did when it first fell out of here, and then it kind of stopped, right? Like I was expecting it to see, down here real fast. Now it still might. But yeah, it's the massive liquidity. But, what I wanted to say real quick is, Epic's model, that's finished, right? It's got through its 4 generations, and its black box is done. It's all done. Like we literally have the largest, most successful hedge funds in the world as members. And I'm not exaggerating. And I can't give you names, but we actually have senior people in the most successful hedge funds in the history of planet Earth. Senior people, very senior, top people using Epic's model. So, it works. And it's just a matter of, doing the work, going back and doing all the work on this. So we'll do it on Wednesday. Anyway, I apologize. I got a class I got to do. I'm going to be watching the markets. I'll be in my office, of course. I got a class this afternoon, so that's why Mondays I can't do our masterclass. But this is a good start for Wednesday, or yeah, Wednesdays. Tuesday, we're going to finish off with morning momentums. And if we do it fast enough tomorrow, because we should be able to, it should be fast tomorrow, so we can even start on this model tomorrow, depending on how morning momentum class goes. So this fell off. That's too bad. Yeah, so good luck this afternoon, guys and gals. I'm going to leave you to it. My class runs until 3, and then I'm going to head out. To do some diving. The market itself, personally, I hesitate to trade this afternoon anyway with what I've seen in the models this morning, right? So that goes back to the models. There was some divergent stuff, like an Epic's model, it was divergent this morning. And whenever you see that, it's like, oh, okay, you know, the machines, what's happening is the models get divergent when the machines are off. The machines shut off because the market gets fucky, right? And then, so everything kind of goes, and then once things kind of settle down and repair, then the machines go back on because it's predictable, and then they start trading. So anyway, have a great afternoon. I wouldn't trade too much. I would keep it as cool as you possibly can, and just set yourself up for tomorrow morning. Now, if you get an opportunity, go ahead and take it this afternoon, but I'd set up for tomorrow. Is 2017 so far an anomaly in the markets or within the model? Yeah, the models, the anomalies are like small time frame issues, like this morning, for example, right? So the models were divergent for about, I'd call it 4 hours. So yeah, but major events, they'll be divergent for days, but not weeks. Cool. We'll talk to you guys later. See you in the morning. Enjoy your afternoon. I'll leave the room on for you. Yeah, no problem, guys.